Hi there. So I'm Sharath, and every week we cover the Nifty Bulletin. I'm supported by my analyst Aman, who works behind the scenes to collate all the information. This is primarily an effort by me to make my investments and my swing trading decisions more prudent. Whatever decisions I take and whatever research I do to stay tuned, I bring it on my channel. And this is not a recommendation or advice to buy any of the stocks, but we follow a pattern wherein first we talk about what happened in the Nifty, take an outlook of what's expected in the next week, look at some of the quotes from very famous investors. That's how this is structured. So starting with the first part of the bulletin, that's how did the Nifty behave this week. Nifty went up by 1.23% this week to close at 22,419. So it was a bullish week wherein we saw a very broad-based consolidation and a rally, wherein we saw 37 advances and 13 declines. And Nifty midcap also went up by 3.6 to close at 14,084. What's worrying overall from the market perspective is the fact that FIs for the third straight week had a sell week, and it was the DIs which has been the usual case, which brought in the required party to have the bulls dominate the market. So FI is bought for sold for 14,703 CR and DI is bought for 20,796 CR. So overall trend still looks slightly more cautious because of the fact is that FIs are withdrawing money. There is election around, but there's nothing which is showing a sign of weakness. But there's definitely caution in the market, and that is expected to continue. Now, in terms of the sectors that we had this week, mostly a very, very positive week for metals, realty, pharma, and auto. And as I mentioned, that the rally was fairly broad-based, so we didn't see any major declines in any specific sector for that matter. Even in IT saw a little bit of pullback, wherein we saw a little bit of positivity in some of the big weights over there. So that was Nifty for this week. The markets will remain in consolidation phase, is what our assumption is during this week, until unless something significantly changes. Now, every week we cover something from the top investors and we try and understand the philosophy. This time again, it's Warren Buffett. The quote that we have gotten is it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So, what the intent over here is obviously that buy the companies which you genuinely believe are going to dominate the space in which they are operating. And even if you pay a fair price rather than a very cheap price, it's worthy of an investment because then that becomes a long-term investment. So that's primarily what we are inferring out of it. But the key point is that it's really the business that you're buying, and the more depth it has, and the more dominant it has in an industry which is growing, the better it is. So buy a wonderful company at a fair price rather than buying a fair company at a wonderful price. So don't do bottom fishing is what the primary point is over here. We try to follow this as much as possible, especially for investments. But swing trading, we definitely go by the momentum, as you will see in the subsequent slides a little bit. We do have a broad-based basket for that. Now, as part of our attempt to understand the market and take decisions based on the rationale, we study some of the key results. And this week has been the results week, and we bring in some of the top companies' results to figure out how things have been. One from obviously the big weight of the Sensex, that is Reliance, then Bajaj Finance, and the last one from the FMCG Nestle. So we're going to bring that the key points and the insights from these companies. The first one being Reliance. If you look at the revenue up by 11.3%, but the net profits fell by 0.39%. Now, if you look at the market expectations and how the market has responded, I think the results were fairly in line with the market expectations. Although the Geo's profit grew by 12%, uh, the geo profit grew by 13.4%. which is positive, and the fact that it is planning to expand, uh, we believe that overall these results will become more encouraging as we move forward because telecom as a sector is definitely expected to grow. And one of the things that has been pending in this sector is the rate hike, which will be passed on to the consumer, and then the profits are expected to grow. There is a lot, they're just trying to make the market in such a way that there is less elasticity in that particular space. And once there is enough depth in the services which are based on the telecom uh, has been created in the market, the prices will start rising. So that's what we believe. And the average revenue per user in the Geo business stood flat at 181, which is the primary reason what I'm saying that until unless the actual cost is not passed on to the end consumer, even though the base is growing for Reliance, the average revenue per subscriber is not been increased. The profits will not increase, is what my assumption is. So what we believe is after the elections, there will be change in the pricing, and once the pricing change, the profit margins will increase. And if there is not movement from Reliance to Airtel, which is highly unlikely because this is primarily a space which has been very well carved out for two companies, which are the two primary companies in the space right now, we'll see that the profits will go up, and that's the time when the stock will start zooming up further. Although this Reliance as the stock has been in the consolidation phase from quite long. And it also announced a dividend of 10 rupees in this current results. So that was Reliance Q4 FY24 results. We maintain a hold on this, and if you want to buy on dips, it's definitely a company which you should look to buy because it's a stable investment, and definitely on the charts it looked very promising for the 2 to 3 year horizon. The next one is Bajaj Finance. This is to a certain extent very good in terms of the numbers that we saw. Revenue up by 31.3%, net profit up by 21.1. Assets under management also going up by 34%, customer base increasing by 21%. So this to me is genuinely a big jump because the customer base is increasing. However, the markets did not react very positively because the borrowing rate for the financial institutions has increased, and because of that, the net interest margins that they are able to generate is reducing, and especially for a company like Bajaj Finance, which is an NBFC, is under the scanner of not being very aggressive with the loans. It's definitely having some kind of reaction in the market, and the stock fell by almost 8%. So is it a stock which is a wonderful company at a fair price? Uh, I would say that at least from a short-term perspective, if you want to start accumulating this stock, and it is one of the stable stocks in the NBFC space, this price definitely it seems to be a good company to start investing. And as I mentioned, there is decrease in the reason it fell was also the fact that the management indicated that the margins will be under pressure because of the rising interest rates, and also the fact that there have been more provisions made for loan losses and provisions to support the bad debt, which is the NPA. So there's a little bit of an indication of potential weakness both on the net interest margin as well as NPA, but still overall a very good investment at the price at which we are seeing the growth. So PEG is definitely moving in the right direction. The third result, as I mentioned, would be the from the FMCG space, that is Nestle. Nestle revenue grew up by 9.05% and the net profit up by 26.7%. Now, the key point over here being the fact that the CSR budget has been reduced by 71%, and despite inflation, the company has been able to maintain the profits, and because of that, the stock increased by 2.5%. So overall market has received this very, very positively. Now, if you look at these two decisions, that is reducing social responsibility expense by 71%, and then coming in partnership with Dr. Reddy's to come up with a nutritional product, means that Nestle is slowly moving away from itself being in a space wherein its food can be criticized to a space wherein its food can be recognized as nutritional products. Uh, and it's moving some of the budgets over there to actually come up with new products which are primarily targeted to the Indian market. So that's a very positive sign. And overall, if you are invested in FMCG space, at least my own decision is to move from HUL to Nestle for now. That's how I am thinking. I do have some investments in HUL, so I will be moving there and taking this as one of the companies that I start dipping in. So that was Nestle, and that was the result season. The next part of this entire this thing being the fact that we cover which stocks are demonstrating strong movement on the graph or on the technical charts. And the way we come up with this is that we have identified stocks which are very, very strong fundamentally, and we've created a list of 150 such stocks. And we look at how the price action is on a daily basis and on a weekly basis, and stocks which show strong momentum, and the fact that they take support at higher levels on an ongoing basis for on a weekly chart as well as on a daily chart, we shortlist them. And the other part of criteria that these set of stocks go through is the fact that when the rate or when the price action was positive, were the volumes good? Did it result in a spike in the volume, or the volume started drying up the moment the prices went up? So that's the second set. Then positive trend on the EMA, and we have, as I mentioned, it's primarily fundamentally strong stocks. This gives us a list of 10 to 15 stocks on a weekly basis. The stocks that we picked up for trading this in making some investments during this week include Concur, which is trading at 1067 and a P of 53.1. It's slightly higher than its median. It's significantly higher, but that company is growing very fast. So IDFC First Bank, it has consolidated in the range of 85. So that's definitely a good stock with a P of 19. NMDC 257 and a PE of 11.74. Hind Copper 392 and a PE of 125. So this one we purely based on momentum. We don't understand it completely. UTI AMC showing very strong momentum 975 with a PE of 18.7, and Federal Bank. Now some of these stocks we might be also turning them into investment, but these are purely stocks which are there for swing trading. We're looking at a horizon of 1 week to 1 month to stay invested in these stocks and make some profit of 7.5% plus. So that's what we are investing, and that's what we studied. These are not stock recommendations. This is just our understanding and what we are taking our bets on. If you have any queries, you can always put them in the comment section. I'll see you in the next one wherein we cover a similar set of nifty news for the next week. Bye for now. Any questions? More than happy to take them in the comment section.